Call your mom, call your therapist, call your ex-girlfriend from middle school.
I don't care who you call, but you gotta call someone because you need a hug. Someone needs to give you a cuddle after the absolute bloodbath of a stock market session we had today. Folks, if you happen to not look at the results of the world's largest casino after market close today, Tuesday, August the 19th, don't, because it is nothing more than a homicide. I'm talking blood red, and even the whole situation was really bad. There were a couple individual tickers, namely Palantir, ticker symbol PLTR, that was especially murdered. And in this video, I want to be breaking it all down. I want to explain to all of you exactly why the overall market had such a sell-off today, why certain individual equities, Palantir, Coinbase, MicroStrategy, Nvidia, got especially hit, but most importantly, I want to tell you what to pay attention to for the remainder of this week, because man, oh man, are we playing with a lighter as there's a bunch of gasoline just over yonder. Now, of course, before we get to it all, if you enjoy these type of market breakdowns, don't forget to like, subscribe, share it with your grandma, tell your wife about it. I don't care what you do, but don't forget to do all that fun stuff because it really does help me out with the algorithm. Obviously, thank you. I appreciate that. And with that, now back into character.
Let's roll the tape.
So by the time we all had the opportunity to catch our breath and stop crying on the day, here was the official headline. S&P 500 closes lower as Nvidia pulls down tech sector. Dow briefly touches a record. So let me show you what's going on. The SPY popped early in the morning, vomited all day. Same thing in the Nasdaq, same thing in the Russell, same thing with Bitcoin. And if you look at the entire heat map, that's a lot of red, especially in the very weighted, very impactful tech names such as Nvidia, which is the world's biggest stock. And when the world's biggest stock drops 3.5%, you know you have a problem. Now, first, I know I'm showing you all the red. I know I'm talking about all these homicides, and I know I'm talking about all the craziness with my red glasses. But first of all, take a breather. When in doubt, zoom out. Don't freak out because of one day's movement. Here's a look at the S&P 500. Even though we got hit by 0.6% today, overall, we are 2 days removed from an all-time high. That's not that bad. Overall, we still have higher highs and higher lows, and I really wouldn't be finding much concern until we snap this bottom line, until we snap the recent low, or until we snap the 50 EMA. So overall, even though it's a red day, and I get that we all want it to rip and rip and rip, sometimes that just doesn't happen. So when in doubt, zoom out. With that being said, on an individual basis, I should point out part of the reason why we sold off today was because everyone and their grandma was selling calls, buying puts, removing positive delta, adding negative delta, and that puts a lot of downward pressure on the overall system. With respect to the NASDAQ 100, remember the tech-heavy sector that really very much includes Nvidia, the picture was not that much different. Overall, we're still building up, higher highs, higher lows, same thing as the S&P 500. Let me know when we break the bottom line. Let me know when we break the 50 EMA. Let me know when we break the recent low. At that point, I might be a little bit concerned. Until then, this just seems like a natural rotation. And of course, it could break. I'm not going to tell you we're definitively going to bounce, but don't freak out because of one red day. Granted, this was a bit worse, and you're about to find out why. This was bad. Look at all that call selling, all that put buying, the delta diving like no other. And what specifically took a hit was the Mag 7. That delta looks like me going backwards on a roller coaster, nothing but a puke fest. Look at all that call selling. Yes, there was some put buying, but the fact that this orange line was dropping the entire day tells me that's a lot of profits being locked in. So yes, were some protective downside bets purchased today, as in some farther outputs? Of course they were. But really what we were seeing today, and I'm showing you this quantifiably, is a lot of profits were locked in as we're heading into some of the craziness for the remainder of the week. And of course, I'll be getting into that. But last but not least, I should also let you know, Bitcoin having a legitimate technical breakdown not long ago, hitting an all-time high. Since then, snapping the trend line, snapping the 50 EMA, and really eyeing up. Like, it's looking like a cutie. It's seeing that recent low, like that hot girl from across the bar. There it is, 112,000, and it's about to make its move. Is it going to get rejected? I don't know. It might be a smooth player. but we're gonna be finding out. So please watch that. And obviously, to no one's surprise, I bet that delta just getting absolutely destroyed. But I should clarify, people aren't betting on it going down. They're locking in profits. They're selling calls. It might be selling to open, selling to close. It's probably locking in profit, but even if it's not, it's basically just saying, okay, it's either a neutral bet or a bearish bet. So the fact that this longer term call dropping so much, removing a lot of positive delta from the system, but it is causing quite a few people to freak out. Crypto stocks tumble as investors go into risk off mode. So remember, when you have highly levered things, when it's good, it's really good. When it's bad, it's really bad. MicroStrategy getting absolutely curb stomped, and it wasn't the only one. Take a look at Coinbase, also about to have a clear technical breakdown, down 5.8% of the time. So once again, remember, when you're playing with highly levered assets, the good times are great, but also that means the bad times are uniquely horrible. Look at the 2x leverage one, BITX down 5.7%. If you caught this, a massive congrats to you, but I think a lot of people were actually, in fact, caught off guard, and that's what I would fairly say about the entire investor and trader base in Palantir. Before we get into this, don't freak out. I am not saying something negative about Palantir. I'm letting you know why it's down today. I am an investor in Palantir. Once in a while, I'll actively trade it, but it's really just not my go-to. So this is, for me, if anything, like selfishly enough, I kind of want it to come down a bit more so I can invest more. I want that being said on the outset. But for right now, yeah, it was overvalued. We're starting to drop. It is what it is, but I'll let you know specifically why it's down. Palantir stock slumps 9%, falling for a 5th day from record. Palantir currently trading at 157, all-time high 190, currently down about 17%, getting this downside gap fill from basically the 4th to the 5th of the month, and we're heading to that 50 EMA. In all reality, I wouldn't mind adding some around 120. Now I get it. That's a pretty scary thing to say. That's another 20-25% drop, but I would personally love to be adding at this level because remember, I rarely actively trade this. This is something that I want in my long-term account. So for all the people who are freaking out that you missed this push higher and higher and higher, well, you might be getting your dip buy opportunity. In all reality, I wouldn't mind adding in that particular situation either. But for those of you in the short term who are freaking out about this drop, you're probably wondering why in the world did that happen? And here's your answer. Jim Cramer. Palantir making its run to my $200 price target won't have to wait too long. That was posted on August 12th, which means basically you guys are a couple days overdue for a dagger to the heart because as soon as Jimbo Cramer gets on your side, you are guaranteed to lose. And that took, honestly, not even a week. It took 7 days and he basically screwed you guys over. So I'm super sorry for that. Now, on more of a serious note, why did it actually go down today? Citron Research. If you don't know who Citron Research is, it's a highly respected short analytics, short seller type of a firm. They do a lot of research and they basically said that, hey man, it's overvalued. OpenAI at $500 billion puts Palantir at $40, and that's generous. Now, obviously, if you want to read more of the details, go to these links, read it. I'll make sure it's posted in the video below. But basically, the TLDR of this is if your question is, why did Palantir go down today? Well, it's because people chose to aggressively sell because of this Citron Research report. So do I necessarily agree with it? In the short term, it is overvalued by basic PE ratios. But I also, once again, don't freak out at me if you love Palantir. I'm letting you know, the lower it goes, I'm just going to end up buying more. In the short term, based on, once again, run-of-the-mill, basic, fundamental analysis, it is overvalued, but it's not the only one. The entire market is. NVIDIA is. Microsoft is. Right now, we hit all-time highs. That's what happens at all-time highs. This is a natural cycle. Don't freak out. Basically, just wait for your favorites to bottom, and then that's where you add to it. It's really not that complicated of a thing. But once again, just to show you how Palantir is not by itself, Meta restructures AI group again in pursuit of superintelligence. So market received that as bad news. Meta taking a 2% hit off its all-time high and kind of looking not that far off from Palantir here, where it was coming up to its downside gap fill and then absolutely puked. Wouldn't be surprised if Meta is about to do that from 745 all the way down to 708. So I'm just showing you that. If you want to take that trade, have at it, but you should know there is also an upside gap fill to about 781. So I want to let you know that. There's all the craziness with individual equities, and we're seeing it. Like I'm showing you some examples, but right now we just saw a giant rotation from really risk on tech to everyone's risk off. And the question might be, why are we seeing that pivot right now? Well, part of the reason is Trump. Trump expands 50% steel and aluminum tariffs to include 407 additional product types. Now, that's obviously not going to directly impact all companies that we care about, especially in the tech sector, but it kind of reminded the market that, hey, man, we're still once again in this trade war. We actually never ended it, so don't forget, tariffs could still be popping off. I would argue that this is in fact a smaller reason, and the more important reason is what's coming down the pipeline for the remainder of the week. Wednesday, August the 20th at 2 p.m. Eastern, FOMC meeting minutes. What happens at market open on Wednesday is VIX expiration. Volatility contracts expire, which can easily prompt quite a few movements. Thursday, we have some PMI numbers, initial jobless claims, and then the belle of the ball this week is Friday, when Fed Chair Powell speaks at the Jackson Hole Symposium. And if you look at the past couple of years, this has been a very impactful event. So I think the market, as I showed you in the options over there, ended up saying, hey, we're already up a lot of money. Let's lock in these profits. Now, of course, some protection was bought, as in some puts were purchased, but most of the delta drop-off we saw today was from calls being sold, which I would, and we're going to check this tomorrow with the open interest, but most likely it was just profits being locked in. And it also led to this, let me show you over here, the big guys pretty much all day, this light blue line just ended up being net sellers across the entire New York Stock Exchange. So we're seeing the big players once again getting out of some positions in equities. We saw that in options. And if anything, this just seems as if the world knows we're going into an unknown event. And when you're already up so much money, what's the point of risking it? And really, if I were to say that in a more comforting way, when you're this high and you have a little bit of a red day, don't freak out. When in doubt, zoom out. It's a little bit of red. And in all reality, as an active trader, you can make money into any direction. It's not like you can only make money in the bullish direction. Since we are talking about individual equities, the final thing I do want to remind you, we're in earnings season. Tomorrow, Wednesday, before the market opens, Target will be reporting. And then on Thursday, Walmart will be reporting. So both of those are going to be giving strong indications to what in the world is going on in the world of retail confidence. So obviously, Target, Walmart, you might want to be paying attention to those. But obviously, FOMC, vol, expiration, and then on Friday, we're going to have Jerome Powell giving us a speech from Jackson Hole, all very, very important. So basically, I wish I could sit here and tell you, yes, be bullish, yes, be bearish. I can't, and no one in the world can. But what I can tell you, quantifiably, from the empirical data that we have, something is brewing. I don't know if it's bullish or bearish, but what I can tell you is if you can catch the upcoming trend, you're probably going to be in for a pretty fun ride. And all you have to do at that point is just use basic run-of-the-mill trend identification, such as, are we on top or below major EMAs? Are we breaking highs or are we breaking lows? We do not need to reinvent the wheel. That's what I have for you now. Obviously, I hope you're crushing in trading. Stay safe. I appreciate all the good vibes. I'll catch you in the next one. Peace.